Not every single move in the market is meant to actually be traded. Why do I say this? Because every single market move has two phases. We have the emotional reaction, and then we have the clear, simple understanding. The reaction comes first. Very fast candles, lots of urgency, momentum that feels undeniable. That's emotion entering the markets. And on Friday, price moved very aggressively early, and it did look like an opportunity, but emotion moves much faster than clarity. So if you don't grab the initial move, it's okay, because only after the move slows down, the structures start to appear. Levels start to hold, direction becomes very measurable and very simple. That's when execution can become calm for you. And in this video, I'm going to show you how I traded this bullish continuation on gold and beyond. So initially, once we started turning bullish here a little bit before the New York Open, I started building a position because we were holding the previous lows. I'm specifically talking about this low over here, where price came to it, held it, came out, came back in, came out, came back in. And it was all supported with this trend line over here, which indicated price was contracting. So we have a support and a trend line, resistance, and price is stuck between those two. Once price action hit the VWAP over here, we started pushing towards the upside. We eventually made a pretty nice candle to break the top deviation and get out of this resistance. And then we pierced through the daily high. Now, for context, there's the daily high. Price action resisted, created a reversed head and shoulders at it, and then pierced through it, indicating that the bulls were very much in control. But because this was an emotional move, the first sign of weakness, so when this candle opened up here, we saw a lot of weakness towards the downside. Very quickly started pushing down, which resulted me in taking my profits, but not too bad. About 2,200 points per position, and that's 4 of them. Then, once the move was over and structure came into play, which in my personal opinion, this is where structure started to form, and you can see price action slowly moving towards the upside, I just waited, and I waited for price to start forming lows. And as price action formed lows and respected those supports, I started getting into positions. I eventually got out with a nice profit. Now, the moral of the story is that if you don't catch the actual reaction, don't rush, don't worry, just wait to trade the understanding. In this case, price action followed through towards the upside. But in other cases, the market might completely turn around and go towards the downside, allowing you to profit from the reaction. All you have to do is have a definite entry criteria, which will allow you to wait for the setup to come to you.